All right, Chapter 12, Abandonment and Surcharge. This is the railroad accounting principle, let's just go back right here. Railroad Accounting Principles, Final Reports, September 1st, 1987, Volume 2, Detailed Report. Railroad Accounting Principle Board. Um, Chapter 12, Abandonment and Surcharge. Explanation 2, Related Application of Railroad Cost of the branch for land abandonment, the light density, light surcharge of both applications typically predict with light density and with the carriers are believed unprofitable. In following analysis, cost of abandonment, the application cost or surcharge application not distinct, in which case involved in the two applications do not appear to have material difference in economically accurate cost of both applications. However, the assessment of the revenue expected cost of both operating expenses, the operating cost is continuing to own and operate at a line. The application of the principal abandonment and surcharge cases. All the railroad accounting principles apply to the abandonment surcharge case and abandonment and surcharge cases. The concept of availability contained with the casualty principle is essentially determine the relevant economic cost of the abandonment and surcharge decision. Evaluation of the branch line profitability of these costs which would be avoided in the branch line service the discontinued plus opportunity of the cost of the assessed with the service computed the expense with the revenues generated with the branch line service the charge with the branch line asset for the specified time period must exceed the cost for the same time period if the line is to be profitable. Relationship between the approach for the youth established the casualty relative to the time operation, but the important determining the avoidable the branch line of the casualty principle strictly for the economic viewpoint. The abandonment of the surcharge decision is based on the estimate of the future profitability of the branch line. When the avoidable cost of the traffic branch for the moving is likely to preserve the directly avoidable cost of the track moving off the branch line off the branch cost. The most interchangeable difficult to be observed in such case casualty established through the variable cost of the general purchasing cost system. Thus, average variable cost, depending on the general purchasing cost system, may be appropriate with than direct observed. Homogeneity. Cost of the traffic moving off the branch line may be interchangeable with the cost of other than traffic moving over the same line. According to the homogeneity of the principle, the average variable cost from the general purchasing cost system are more appropriate than direct observed costs in such cases. For example, there's numerous trains move over a mainline segment. The actual trains which handle the particular branch line traffic when it leaves the branch may be determined largely in chance. Practicality. Since the cost of the direct observation would likely to outweigh the benefits of the most accurate with the off the branch with the particular principle, practicality principle also suggests that the government, the general purposing cost system should be determined with the off the branch cost. For example, the traffic origination terminating on a branch line may move for hundreds or even thousands of miles off the branch over the application railroad system. Avoid line specific capital costs. Avoid movement and specific operation costs from the off-branch traffic would be extremely burdensome to identify. Specific circumstances in each of the cases considered by the Interstate Commerce Commission use the requirements of the casualty principle. Practicality principle is guided with the case for the significant cost may be not avoided until the same in the future should be used with a multiple years estimate with the cash flow. However, the example for many costs may use a single year estimate because of the cost of the benefit consideration. Data integrity. Under the data integrity principle, the cost estimate and abandonment with the surcharge should be supported with the underlying source of the record. See any explanation with the rational key assumptions used because of the importance of the line specific cause of the information of these cases, such as mentioned, should be free of the error of the conform the Interstate Commerce Commission Accounting Act. The Interstate Commerce Commission discovered the rebuttal procedure may be used to ensure the data integrity. Alright, the etany. The etany of the branches for which the abandonment of the surcharge is sought with the part of the railroad etany affected by the branch line. Since revenue of the branch line traffic cannot rationally be supported between between on-branch and off-branch, the avoidable cost of the branch line traffic moving on the off-branch must also be included with the analysis. Or your cost of capital. Relative cost of capital is abandonment and surcharge change that reflects the opportunity cost of the cost of return that they could have the earned or liquidated branch line with the reinvesting and the proceeding with the redeveloping its assets for the best alternative use available. Opportunity costs are computed with applying with the cost of the capital rate with the value of the branch line assets. The opportunity of the cost capital components are determined with the cost of the capital principal and asset valuations related to the expense principal. The cost of the capital rate according to the cost of the capital principal may be either national regarding railroad specific railroad rate is comprised with the weight of the average nominal correctable cost of the debt and equity capital should be included with the cost of the equity component with the pre-tax basis to reflect the statutory combined federal state tax income tax rate, and since the revenues associated with the assets to be liquidated would be taxed at a marginal rate, the cost of the capital rate reflects the average rate at which they would be earned in the railroads if they retired debt and equity that proceed with the disposition of the branch and line assets. Alright, your assets valuation related expenses. Branch line assets should be valued at a current market value less than the estimated with the cost of the removal, disposal, evaluation. The valuation measures typically called with the net level value should be included with the working capital, including the tax benefits. Abilities for growing such valuation confer the operating cost for the concept of the appropriation of the abandonment, the surcharge cost reflective of the asset valuation. Related expenses, ideally off-branch assets should be valued either in the same manner on-branch assets. However, the mentioned previously estimated off-branch cost frequently of the general purposing cost system for the particular region, but the general purposing cost system typically reflects the asset valuations at acquisition cost less than accumulated depreciation. Expected change in asset values should be included with the capital gain loss for the determination of the profitability for the continuing of the branch line operation. Recognition of the capital gains and losses necessary to avoid double counting the inflation sense of the nominal capital cost of the capital rate, which reflects the expected inflation reviewed of the conjunction with the current value of the asset base. Alright, the railroad accounting principle believes the asset base of the abandonment surcharges should include the working capital assessed related taxes, consequence for the continuing the operating of the line, working capital of the committed to the continued branch line operation tax gains, the losses of which would have resulted for the disposal branch line assets representing the fund that could be employed with an alternate use. Alright, productivity. In accordance with the productive principle, when input prices indexes are applied with the historical abandonment, the surcharge of the cost of such indexes are appropriate to change the productivity measurement either by the national survey the age of the individual product measurement, depending on whether the national individual index is used. The appropriate measure should be decided by the Interstate Commerce Commission on the basis of integrity for the information furnished from the party of the proceeding of the using product adjustment, but the index should be reduced. The change of the branch line profitably would be understand due to the cost of the projection with the fail to reflect the current productivity resources. Analysts supporting rejection changes to the application. One commenting party stated that the cost is not avoided, but the long-term basis should be excluded for the consideration of abandonment. The cost of the pay suggested that costs will continue to be incurred long after the branch line is abandoned, but more than 5 years after. These costs should not be included with the avoided cost. The relevant time orientation cost of the regulatory decision must be established in accordance with the casualty practicality principles for the branch line abandonment decision. Long-run cost and renewal relevant because of the irreversible nature of the abandonment. Thus, all the costs would be avoidable in the future. Addedly, would be considered, however, the year with which the cost is avoided more than further in the future. Present value of the cost avoided with the savings because of the increasing less significant the particular abandonment. The case of the approximate number of the year of the evaluating cost avoidable must be established by the Interstate Commerce Commission on the basis of the existence of the causal relationship as material with the cost of the present value. The railroad accounting principle board focused on the primary application of the cost of capital with this asset valuation related with the expense principle, the abandonment of the surcharge the case of the representing with the major items at issue. The railroad accounting principle was adopted with the convent valuing branch for the asset with the opportunity cost of the abandonment. Is surcharge with the net liquid value represents the asset of the opportunity for the cost consistent with the asset valuation related with expense and principle. One party expressed the concern with the equipment evaluation based on the opportunity cost but not equated with the replacement with the cost established on the basis of the purchase price for the new equipment. The party stated with the casualty principle requires that the opportunity to spend on the future demand with the specific equipment used for the branch line services. The railroad accounting principle board conserves the statement of the opportunity cost does not necessarily equal the replacement cost. The concept of the opportunity cost evaluation was previously addressed in Chapter 11 Competitive Access, where the long run application of the opportunity cost of a core evaluation equated with the current market value. Current market value depends on the remaining productivity capacity asset being valued demanded with the service being best alternative to the concept concept is consistent with the avoidable criteria for the casualty principle. However, the Railroad Accounting Principle Board does not require the valuation of the specific piece of equipment used on the line subject to abandonment according to the homogeneity principle of the particular asset represent the interchangeable resource, the average market, and the homogeneous pool of the assets should be used. For example, the normal power requirement for the train service branching line is 2,000 horsepower locomotive unit. The average current with the market value of the railroads of 2,000 horsepower locomotive unit would be preferable to the current market value of the particular 2,000 horsepower locomotive unit on the branch during the past month. The fact that the particular locomotive unit was used on the branch line during the past month is largely a matter of the chance rather than the reflection of the causal relationship between the service provider and the cost incurred. Alright, the analysis of the appropriate cost of the capital rate with the abandonment, the surcharge of the calculate put forward primarily with the real normal rate should be used. The proponents of the use of the real rate claim that its real rate must be used in conjunction with the net liquid value asset base. From the net liquid value asset base's current cost level already includes inflationary effects. The claim that uses nominal rate will result in the double recovery of the inflation of the capital costs. There are proponents for the use of the real capital cost of the rate, with the say of the application particular practicality principle requires the use of the real rate. They maintain that the use of the nominal capital cost would require the complex index in the diverse capital. Assets used in real cost for the capital rate, but computed with the use of the general measurement of inflation appropriate for the use of the abandonment cases. Proponents for the use of the nominal rate with the claim of the opportunity cost for the cost for the foregoing the abandonment is not exchanged for the earnings for the line, but they should say that the cost foregone should reflect the nominal rate with the earned of the asset. These proponents believe that the use of the real estate rate, the appropriate only of the asset will not be abandoned, will be revealed annually. The perspective of that viewpoint with the Railroad Accounting Principle Board recognizes the potential double counting inflation of the nominal cost of the capital rate where applied to and appreciating the asset base for the abandonment or surcharge of the capital cost. However, there is rejected for the recost of the capital rate due to the practical measurement of the problems. Instead, the Railroad Accounting Principle Board resolved the double count of the inflation directly, including the projected capital gains and losses of abandonments of surcharge analysis. Projections of the charges and assets of the value wouldn't be made in a branch line level and should be more accurate than generally economy-wide inflation estimates typically used in computing real cost capital rates. The present net liquid value times the nominal cost of the capital rate equals the opportunity cost of the capital retaining the branch line over the rate of the inflation of the asset of the line equals the rate of the inflation implicitly reflected with the current nominal cost of the capital rate. The nominal rate of the recognition of the capital gains of the losses of the reproduce the same result of the real rate of the non-recognition of the capital gains and losses. For example, from a more strictly economic viewpoint, the net liquid value of the time at the nominal cost of the capital rate is less than the expected net operation income test for the capital gain ends for a year, then the line should be retained, ultimately assuming the investor expected the inflation rate approximately the rate of the inflation of the branch line asset. The real cost of the capital rate could be used for the analysis in the case of the real cost of the capital rate times net liquid value is less than expected net operating income for the year. The line should be retained. The numerical example of equivalency of the return under the both approaches is shown below. Alright, the examples of an equivalency of a nominal cost capital rate with the net liquid value, real cost capital rate with the times the future net liquid value, including capital gains. The Railroad Accounting Principle Board remains convinced that the change of the branch line asset value of the general measurement of the economy-wide inflation can be estimated with the accuracy the opportunity with the cost asset of the line should be computed with using unique circumstances surrounding each of the line abandonment. In the case, for example, the inflation of the land price of the other significant portion of the next net liquid value is likely to be influenced with largely located with rather than general economy-wide inflation. The Railroad Accounting Principle Board remains unconvinced of the estimate future asset value of the specific branch line estimate necessary and practical. The same experts with the developed net liquid value estimates for the abandonment case may be able to attach reasonable estimates for the expected inflation of the specific assets. In addition, with the interstate commerce maintains index price of the series, but they apply to the specific asset group. The estimating trending of the net original cost of these indexes may provide an appropriate basis for the estimating future inflation. The estimating inflation with the specific branch line assets provide impractical. The Interstate Commerce Commission has the authority authority to make a suitable adjustment consistent with the Railroad Accounting Principle Board. Finally, several parties expressed concern that the present abandonment applications rules, which require submission of the revenue cost of data of more than 12-month period after the preceding 2 calendar years, would be discounted by the Interstate Commerce Commission because the Railroad Accounting Principle Board emphasizes on the prospective nature of the branch line cost. The Railroad Accounting Principle Board does not address the issue consistent with the data integrity principle if the prospect of the costs submitted by the abandonment cases are based on the actual historical costs incurred by the branch line. The cost estimate should be supported underlying source of the records and explanation of the rational and key assumptions that were used in establishing and modifying rules for presentation of the cost evidence in abandonment cases or any other interstate commission proceedings as implementing issues and appropriate left to be the Interstate Commerce Commission. The effects of the implementation of railroad accounting principles are generally consistent with the current Interstate Commerce Commission procedure for the presenting of the cost of evidence in abandonment and surcharge cases. However, there are three different abandonments and surcharge costing resulting from the application of the railroad accounting principles. The Interstate Commerce Commission does not include the capital gains or losses in the analysis of the Railroad Accounting Principle Board. Will include the capital gains and losses for 1 year period with insignificant and avoid the cost with accepted with the uneven from the year to year. The Railroad Accounting Principle Board would recommend multiple period analysis. The interstate commerce use of the real capital cost rate, the Railroad Accounting Principle Board has rejected the use of the real cost of the capital rate in the favor of the nominal cost of the capital rate. And the Interstate Commerce Commission requires the avoidable cost information of the 2 calendar years preceding the application for at least 12-month period for which the data may be reasonably developed. The Railroad Accounting Principles believe that the abandonment and surcharge cases are forward-looking analysis and must therefore be included in the estimates of future costs. All right, Chapter 13, Minimum Rate, Long Canon.